Good morning, or good afternoon, I should say, everybody. I'm used to doing the game plan. My name is Gareth Soloway here for Trading the Close, and I do hope everyone had a wonderful day. So today we're going to talk about the markets. Markets on a whipsaw battle here. We started out with gains. We then went to losses. Now the markets are basically unchanged on the day. We'll take a look at that stuff just in 1 second. But listen, when it all comes down to it, last month we had a nice gain on the S&P 500 of 4.8%. But you know what? If you take out the top 6 stocks, all right, so again, we're talking the mega cap trillion-dollar names that accounted for 75% of the entire move in May. So it's a little food for thought there. But let's get into the action here, guys, in the afternoon. We see the Dow is under some pressure today, down about 193 points. The NASDAQ is eking out a small gain, and the S&P is down slightly, about 8 points on the day. Oil is taking a beating. I don't believe this is updating, so that's no big deal. Again, we'll have to pull the right data. I'll look at the chart in just a second. Gold up a little bit, but again, that doesn't even look like it's updating. Well, no, that is up $19 and change, and Bitcoin getting a nice little bid today. I covered it on the game plan this morning, that move up off of that trend line. We'll talk about that in just a second. Looking at the heat map today, look at all the red, and then you basically have green and green, right? And so this is some of my issues with the current market condition, is that it's very much skewed to 1 or 2, or as I said before, 6 stocks. So you have a 500 in the S&P, right? S&P 500, 500 companies, a majority are red. I mean, look at all this red here, here. I mean, this is all red except for 1 green. Consumer cyclicals, all of these red, 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 and then you have this is a $3 trillion company, this is a $2.6 trillion company, actually 2.7 today, and those are carrying the market. You have Meta down here, which is green as well, but Microsoft is red, Google is flat, and a lot of sea of red out there. So again, just be aware of it. It doesn't mean that the markets can't go up. Heck, if Nvidia keeps going up, the markets are going to go up. But it does tell us about the breadth of the market, which us as investors need to be aware of. So follow me over here, guys. Let's take a quick look at what we have on the S&P 500. If we flip to the intraday 10-minute chart, here's your gap up today. Look at the nice selling pressure until about the noon hour, and then a light volume float into the end of the day, pushing up. If we look at the S&P here, this is where we closed on Friday. If we draw a trend line across, this move up is trying to bring us basically back to the flat line when all is said and done. And again, very light volume today. Keep that in perspective as well. Couple other charts that I think are worth noting. Today was a day where we saw PMI data at 10 a.m. coming in much weaker than expected. I think it came in around 47 and change. Now remember, with PMI data, anything below 50 is contraction in the U.S. economy. So again, we did see PMI data weaker. That helped the dollar fall. It helped yields fall. And if we look at this yield chart, right, this is the 10-year yield, this classic wedge pattern that I've told you guys about and we've covered in the game plans, very clearly we see again, where are we coming to? We're coming right to that low level around 4.4%. So the question becomes, okay, well, you're coming to a head. So even if we bounce off of this, eventually you have to either break out or break down. Which way is it going to go? And I talked about this morning in the game plan. Per probabilities, probabilities go by how many times has the line hit. This down here, 1, 2, 3, 4, 5, 6 times. That again favors the downside versus only 1, 2, and 3 hits to the upside. That means this line is firmer, this line is weaker. The odds are it breaks to the downside, all right? Now, it could get a small bounce first off the lower trend line. We just have to wait and see. The dollar today also moving to the downside. You had this wedge pattern here. Let me go to the dollar chart. So we had this wedge pattern breakout, and then what I showed you this morning in the game plan, folks, was that you then had a head and shoulder pattern development here. And look at this move. We're starting to test that neckline of the head and shoulders. I did calculate out the target. If you take this high, drop the plumb line down, you take that distance, and you drop it from the break point, we basically get this lower trend line right down here, right around 101.50. So based on this, now listen, it hasn't broken technically yet. The break point is where the target really becomes a reality or should have high probability of being achieved. And right now what we're looking at here is that if this breaks, so it hasn't broken yet, but if this breaks this neckline, then we should head down to 101.50 on the DXY. Now, a couple other charts out there that are making moves and waves today. We have this chart of GameStop. What a wacky chart, right? I mean, we had the mega move up here where we got up to, basically pre-market. We were in the 80s. It doesn't even show here because it wasn't during market hours. But then today, on the back of Roaring Kitty saying, hey, I've got this massive position in GameStop, it opened up basically at 40 bucks and sold off. Again, this stuff drives me nuts because think about how many investors pre-marketing at the open were probably buying in at $40, and lo and behold, we find ourselves back down to basically $28 per share now. And again, that's a huge downside move just for the day. Now, reminder here, folks, I always try to give you guys advice based on my personal failures in trading, and I've had many of them, absolutely. But again, never chase. Okay, it doesn't matter if you think it might go up another 100x. From what I've learned is that that's very few and far between, and you go broke multiple times trying to land one of those 100x moves. So even in this case, buying at 40, I mean, yeah, could it have gone higher? But the odds, again, the risk versus reward, and we know that people here got burned, so they're going to be very fast to sell right here. That's exactly what they did. And listen, I mean, again, ask yourself this. If you had to present a thesis on why GameStop should go up, does Roaring Kitty buying really fit the bill for a thesis, a fundamental nature of the company becoming stronger? And the answer is it doesn't. It's just one person. Now, again, very famous person, no doubt about it, from the meme craze. But nonetheless, there's nothing internally within the company that changed here. And that is a signal that, again, it's probably hype-driven, and I have to be careful about hype-driven plays. Okay, so that's just a little tidbit on that chart. Big move today on oil. Holy cow, what a drop. So basically oil down over 4% on the day. Look at the breakdown here, guys. This was a level, again, we've been talking about, upsloping trend line. And again, we talked about this. If you've been paying attention in the game plans, I gave you guys the bias that we were likely going to break lower. That has now happened. You can see this long-term trend line going back to 2020, basically the COVID lows, right through these lows, and we broke right there. Your next target, again, and I'll actually zoom in a little bit so we can see, but the next target is basically $70 a barrel. In fact, I have it written out right here on the chart. So if we look here, we go from this pivot low here, right through these lows here, right through this point, and that's your target right here, which is right around $70 a barrel. Now, again, do I think eventually we're going to see more downside on oil? The answer is yes. But again, respect the $70 support until it's broken. That's what a technical trader does. Now, again, just to go over why oil dropped. So basically, OPEC Plus came out and said they were going to basically allow more barrels to come on the market. You mix that with weaker PMI data here in the U.S., which is a demand destruction issue, and you have a recipe for a decline in oil, right? So again, more barrels, so more supply, less demand by a weakening U.S. economy. Price is going to decline. That's basic economics 101. Next up, natural gas. Not much to talk about here on nat gas. We covered this in the pre-market game plan, but nonetheless, a good bounce up here. We have resistance up around $3.10, support around $2.30. Gold, same thing, sideways chop today and really the last week or two. This is beginning to consolidate more and more, which gives us, again, a slight downside bias because we have this sideways bear flag consolidation. I have my target around $2,280 in the near term. If it gets there, it might even go lower. We look at Bitcoin. Bitcoin backed off of the highs, did get above 70,000 on the day. But the biggest thing to just remember is you have your levels up here, all right, your levels down here, and then we broke out, consolidated, remember, bullish pattern, right? And then we're starting to break up. Now, again, one of the things I want to just make clear is that this is now on a time clock, meaning that this has to continue to break up in the next couple days. If it doesn't, the bulls that jumped on board here are going to get wary. Remember, not everyone's a hodler out there. There's plenty of traders and shorter-term investors that are playing this move. And if it doesn't make a move in the next couple days to 74,000, I would then start to get nervous that you might see a reversal back down. So again, this is how charts work. They have patterns, and there's a specific time frame when a pattern is likely to play out. And if it takes too long, eventually doubters start to jump on board and say, uh-oh, something's going on, and that can cause the pattern to fail. So again, bullish case on Bitcoin currently, but just remember, you have a ticking time clock now where this must play out. Otherwise, I just wanted to show this chart of Amazon today. I love channels, guys. We've been talking about it in the trading room here. Channels are amazing in terms of their power. Look at this beautiful parallel channel on Amazon. And again, we go through this low all the way to current levels, and then you have this high that's perfectly parallel here, here, and here. So again, the reason why I bring this to your attention is that right now, this is a chart that's right now safe. But if you break to the downside right here, this gets nasty very quickly on Amazon. And I do think it's interesting is even though the market's recovered today and kind of closed back around the flat line, you have to take note of how the market behaved. It was up a lot at the open. You had new money flow for the first of the month from retail investors putting it to work, and the markets again struggled, even in spite of new chips from NVIDIA, AMD. And by the way, AMD was up a lot early on their new AI chip, and they ended up selling off and being negative. NVIDIA still held strong today and was up decently. But again, little signals like that continue to make me wary that institutions are continuing to dump into retail buyers. So an interesting chart there. One other one that I'm just thinking about real quick is CMG. This is one where, take a look, we talk about breakdowns of parallel channels. This actually looks like a breakdown in progress. Take a look down here, right? We have this parallel all the way through here, right? And look at what's happened right here. We've now broken. Here's your up trend line action right there of your parallel. But look right here. You've now broken below the parallel line here. That is a breakdown in progress, in my opinion. Now, if you think about it logically, we know McDonald's is hurting because people can't afford, the lower middle income can't afford to go to McDonald's. We have places like Red Lobster filing for bankruptcy, Boston Market, Tijuana Flats. We have Cracker Barrel in a threat of bankruptcy. And it makes sense that eventually this kind of lack of spending or inability to spend on going out is going to eventually hit the crowd that goes to Chipotle, right? At least even a little bit. But any sort of blip, when you have a chart this vertical, any sort of blip in consumer spending on going out and getting takeout food or going to Chipotle is eventually going to cause a miss in earnings. And this looks like the smart money is starting to recognize that. So I just wanted to point that out via this trading the close. As again, I'm a trader. That's why it's trading the close. And I want to give you guys insights into some interesting charts that I am following. All right, guys, on that note, I'm going to bid you farewell, but tune in tomorrow bright and early at 9 a.m. I'll be live for the game plan. We'll be looking at the latest market movers, the trend lines, the technical levels, the trading opportunities. You guys have a great rest of your day, and thank you so much. Take